Howdy, everybody. Welcome to Liberty Call. Today is Friday, December 20th, 2024. Only 5 days till Christmas. Woohoo! Anyways, hope you're having a great day out there. You can see my main man, Jake, back there. He is holding down the fort for us, keeping everything safe and secure here at DSA Financial Group. So it's a beautiful day here in Colorado. Sun is out. It is not chilly at all and really nice. And there's a turkey walking past my driveway. You see the coolest stuff living out here in the woods. So anyways, all right. Well, before we get in, got a lot of news to cover. Got all the economic data, what happened in the markets today. I think some data and then a final article about, what Trump's plan is for the economy. So, all right. Well, before we do, if you could do me a favor, give me some thumbs up, a like, share, subscribe, a follow, and press that notification bell. All righty. Well, let's hop into the markets. Dow Jones up 1.18%, 498 points, closed at 42,840. I think it was up about 700 points at one point. S&P 500 up 1.13%, 66 points, closed at 59.33. NASDAQ up 1.07%, 206 points, closed at 19,579. The VIX fell 25.82% today. It's back down to 1787. Canada up 0.76, Brazil up 0.47, and Mexico up 0.72. All righty. Let's get to, where is it? They've moved all these around. Oh, here we are. Germany, starting out in Europe, Germany was down 0.27%, the UK down 0.26%, France down 0.27%, Netherlands down 0.39%, Spain up 0.24%, Italy down 0.06%, Switzerland down 0.2%, and Portugal down 0.23%. Russian exchanges both green today. The MOEX up 9.19% today, and the RTSI up 10.34%. Big jumps there. And the overnights, the Nikkei in Japan was down 0.22%, Australia down 1.24%, New Zealand up 1.09%. In China, the Shanghai was down 0.06%, Shenzhen Component down 0.02%. China A50 down 0.72, DJ Shanghai up 0.05, Hang Seng down 0.16, and the Taiwan weighted down 1.84. All right. All righty. Let's get to the markets for the week and see how they did. The 1 week, let's take that off. Go out here. All right. Starting with the Dow Jones, it's going to finish the week down 2.17%. The S&P 500 down 1.78%. And the NASDAQ is going to finish the week off down 1.54%. So all of them down about in the same range. So, all right, get that off the screen. And then we can jump into all the economic data for the week. All right, let's get my screen ready. There we are. Okay. All right. Starting out with initial jobless claims, they came in at 220,000. Forecast was 229. Previous number is 242. Continuing claims came in at 1.874 million. Forecast was 1.89. Previous number 1.879. Retail sales year over year grew at 3.8%. Previous number was 2.9. On a month-on-month number, it grew at 0.7%. Let's see here. Industrial production year over year contracted at 0.9%. Forecast was a growth of 0.1%, and the previous number was contraction of 0.45%. Month on month, it contracted by 0.1%. Business inventories month over month grew by 0.1%. Forecast was 0.2%. Previous number was 0. Housing starts came in at 1.289 million. Forecast was 1.35. Previous number was 1.31. So it did trickle down a little bit there. Month over month, it contracted by 1.8%. Previous number was a 3.2% contraction. Housing starts came in at 1.289 million. Forecast was 1.35. Previous number was 1.312. And building permits month over month grew by 6.1%. Previous number was a 0.4% contraction. The Fed interest rates, they cut rates by 25 basis points from 4.75 down to 4.5. So you can see here over the last 5 years, went up, to 5.5, and then now we're down from there. So let's see what the max looks like. Yeah, I mean, you can see back here in the, early 80s, interest rates were 9, 10, 11, got down to 6, went back up to 9% or almost 10. I was in high school at that point, February of 89. Then by 94 was down to 3.25, and then it went back up to 6 by 2001. So this is when I was buying like cars and stuff. So anyways, and then you can see here the Obama years where it was kept at 0, started ticking up during the Trump years, and then they started bringing it down before COVID happened because there was a lot of things that were going on in the behind the scenes that weren't real good. All right, moving on. GDP was revised up to 3.1%. Forecast was 2.8. Previous quarter was 3%. Existing home sales came in at 4.15 million. Forecast 4.09. Previous number 3.96. And existing home sales month over month came in at 4.8%. Previous was 3.4. And income and outlays, personal income month over month grew by 0.3%. Forecast was 0.4. And outlays grew by 0.4%. Forecast was 0.5. And finishing up here, the Michigan consumer sentiment came in at 74, right on forecast. Previous number was 71.8. All right. Let's get to the market recap and see what happened there. Okay. All righty. U.S. stocks surged Friday, supported by falling Treasury yields after inflation data showed signs of cooling, reducing fears of a more aggressive Federal Reserve in 2025. PCE data provides relief. The Fed's preferred inflation measure, the Personal Consumption Expenditures Price Index, rose 2.4%. Year over year, November below the 2.5% forecast. On a monthly basis, it increased by 0.1%. Core PCE, excluding food and energy, rose 2.8%, also below expectations of 2.9%. This data eased worries about persistent inflation, particularly after consumer prices had surged earlier in November. Morgan Stanley projected that the Fed might cut rates by 25 basis points in March of 2025 as core PCE inflation resumes its downward trend. Some corporate highlights. FedEx gained 0.5% after surprising second quarter earnings expectations and announcing plans to spin off its freight business. Nike shares fell 0.7% despite strong quarterly results as the company flagged severe issues in its guidance. Novo Nordisk plunged 16% following disappointing late-stage trial results for its weight loss drug. A government shutdown looms. The threat of a U.S. government shutdown intensified after a Republican bill incorporating President-elect Donald Trump's demands for increased spending and raised debt ceiling was rejected by the House of Representatives. Several Republican senators opposed the proposal, creating a standoff. If a resolution is not reached, government funding will expire at midnight on Friday, potentially disrupting operations, particularly during the holiday travel season. The looming shutdown, combined with the Fed's caution about the pace of rate cuts, adds to Wall Street's uncertainty despite the positive data, inflation data. All right. So, anyways, all right. Well, let's dive a little deeper into the Personal Income and Consumption report here from First Trust. Mr. Andrew Opdyke put it together. Consumers showed resilience in November with strong income gains and robust spending, while inflation eased slightly. Personal income rose by 0.3% for the month, or 0.5% when incorporating upper revisions, marking a 5.3% annual increase. Private sector wages and salaries led the way, climbing 0.6% monthly and 5.7% year over year. However, government contributions remain significant, with government pay up 0.5% in November and 6.4% over the past year, one of the largest increases in decades. Government benefit payments also surged 8.6% year over year, the highest excluding COVID stimulus periods in more than a decade. Consumer spending increased by 0.4% in November, driven by a robust 8% rise in goods expenditures, up 3% annually. Spending on services grew at 0.2% monthly and 6.6% annually. Encouragingly, inflation showed signs of cooling, with the Fed's preferred PCE price index rising just 0.1% for the month and 2.4% annually, compared to 2.7% in the previous year. Core PCE prices, excluding volatile food and energy categories, rose 0.1% in November and 2.8% annually, down from 3.2% the previous year. The Federal Reserve cut rates at its final 2024 meeting, but signaled slower pace of easing in 2025. Policymakers forecast inflation to slightly increase to 2.5% by the end of 2025. Concerns linger that rapid rate cuts could spur money supply growth, reigniting inflation. Well, it's already growing. While the Fed's acknowledgement of past policy errors seems unlikely, yeah, they're never going to say they did something wrong. Closely monitoring inflation metrics will be critical for sustained economic stability. All right. Well, there's that. Let's get to this last article here, Trump's economic plans. This was written by James Rickards of dailyreckoning.com. So let's see what he has to say. All right. President-elect Donald Trump's incoming administration has outlined an ambitious economic agenda spearheaded by Treasury Secretary Scott Bessent, I'm not sure how it's said, focusing on the three arrows plan to drive growth, manage deficits, and ensure fiscal sustainability. Number one, achieving 3% real growth. The first arrow targets annual real GDP growth of 3% or more, a significant improvement from the 2.2% average annual growth between 2009 and 2019. The plan aims to close the gap between potential 3.2% and actual growth, recapturing trillions in lost wealth. The goal is achievable, drawing a historical precedence like the Reagan-era growth of over 5% annually during the economic recovery. The emphasis on real growth seeks to ensure wage gains are not eroded by inflation. Number two, reducing deficits below 3% of GDP. The second arrow sets fiscal discipline target to cap annual deficits at 3% of GDP for fiscal year 2025. This would translate into a significant reduction in the deficit from 1.83 trillion to 840 billion at a 54% decrease. This ambitious goal involves cutting wasteful spending as identified in the Department of Government Efficiency, DOGE, and increased revenues through economic growth and tariffs. For instance, tariffs on imports could generate 175 billion in new revenue, supplementing tax income without raising rates. And lastly, ensuring sustainability. The final arrow links growth and deficit management with nominal GDP growing at 5%, 3% real, and 2% inflation, and deficits limited to 3% and deficits limited to 3%. The debt to GDP ratio would decline, ensuring long-term fiscal stability. This strategy mirrors historical reliance on tariffs and efficient tax systems, emphasizing reduced waste and sustainable economic expansion. The three arrows plan underlines Trump's economic focus on growth, fiscal discipline, and sustainability, drawing on innovative strategies and historical precedent. Well, I could think of one thing that, just if you're still going to keep the income tax, just make it a flat tax, 20%, get rid of the IRS, boom, done. That saves a bunch of money right there. All right. Well, that's everything that I had to cover for today. If anyone needs anything from me, please go to, wait for it, DSAFinancialGroup.com. All your financial planning needs, keep me addressed there. So give me a call. I'd be glad to help. All right. Well, I hope everyone out there has a fantastic weekend, and I'll talk to everyone next time. Adios.